5 things I wish I knew before I started investing are: Hi, and welcome back. Today I'm here to tell you about 5 things I wish I knew before I started investing. Please note that this is not financial advice. Please consult a financial professional before making any financial decisions. This video is purely for entertainment and educational purposes. Please do like, subscribe, and please write your comments below. Now let's get to it. When I started investing, I wish I knew that there was one fund. If I invested in one fund, just one fund, I could earn a 10% return year over year on average with not so much risk, and I wouldn't have to pick each and every single stock. Now, what am I talking about? I'm talking about the S&P 500. The S&P 500 has returned on average over 10% per year since 1993. The S&P 500 is a compilation of 503 different companies in a single fund. S&P 500 ETFs have a very low expense ratio, so it's not like a lot of your money is going to fund managers either. If you'd like to know more about the S&P 500, I've made another video on this and I'm putting the link here. The second thing I wish I knew was that funds come with hidden fees, and these hidden fees can hurt as they do add up. Funds, ETFs, come with different types of fees. One is an expense ratio, the other one can be management fees, and various other fees such as load fees. A $1,000 investment can be significantly different after 20 years based on what fund you put it in. A fund that gives you 0.03% can give you $1,000 more at the end of 20 years compared to a fund that has an expense ratio of 1%. The third thing I wish I knew was that sexy companies do not necessarily translate into sexy returns. I invested in a lot of companies that people were talking about, that was the buzz on the street when I was young, but you know what? A lot of them don't exist anymore. Companies such as Beyond Meat and Peloton have lost over 95% from their all-time highs. That's a massive erosion in value. And investors who have invested in those stocks have lost a lot of money. Instead, companies such as Home Depot. Home Depot is a company that has a tried and tested business model. It's been in business since forever, almost it feels. These are companies that are giving really amazing returns to shareholders. They may not grow as much, but you can count on them. The fourth lesson I've learned is emotions can be very, very expensive. I'll give you my own example. In 2008, when the market was collapsing, when every day there was financial mayhem on the street, I panicked. I sold off a lot of good, fundamentally strong companies when the market was going down. And you know what? Just a few months later, those same stocks were going up. So on the way down, I lost money, but I also lost the opportunity to get back that money and to gain much more as those same stocks were going up. So it's important to keep calm when the market is down, and instead to start thinking about which companies or which funds one would like to buy as the market is at that low point and is going to go up in the future. And fifth, and probably the most important, is to start early. I started investing at the age of 21. And in hindsight, I wish I'd started earlier. I'll tell you why. The power of compounding really does reward people who stay invested in the market for a long time. I'll give you an example. If one starts 7 years later than originally planned, you'll only end up with 50% of the money that you would have got otherwise. What does that mean? If you have $1,000 today and you stay invested for 42 years, you can have $64,000. If you start just 7 years later, you may only have $32,000. That's a big difference. So the key really is to start early, because then your money has more time to multiply. And the key is those last few years, because you have that extra time for that money to grow. These are my 5 things I wish I knew before I started investing. What are yours? I'd really like to hear that. Please mention it in the comments below. Please do like, subscribe, share this video. Thanks, and look forward to seeing you again. Bye.